Hi and welcome to the Market Alert for Thursday, the 23rd of September 2021. So yesterday was a big day. Powell was out speaking, FOMC, etc. Stocks, bonds, bullion and Bitcoin jump as dollar dumps on hawkish Fed. Our markets pricing in next QE already. Now this is interesting because that's precisely what is going to happen. Never mind tapering, there is going to be more QE without a doubt as we go forward this winter. This one, watch Fed Chair Powell reiterates that tapering is not tightening. This is semantics, or Fed semantics as it's known. Will Powell go full Greenspan? Yeah, he will eventually. There's no doubts about that, where there'll be more printing. And here's the interesting thing where they... Just move this over a bit. A quick summary of what the Fed said and talk about, again, going back on what they said before. Just as expected, the Fed signaled that moderation in the pace of bond buying may soon be warranted. Take note of this, may soon. Doesn't mean say they're going to do it, may soon do it. There's a reference to Delta here that wasn't in the July 28 statement, and that's Delta, obviously, of the variant, not of the Delta in trading. The sector most adversely affected by the pandemic has improved in recent months, but the rise in COVID cases has slowed their recovery. Again, more BS. Median inflation expectations were revised, and this is interesting, significantly higher, and GDP was revised down notably from 5.9 from 7 this year. Now, hang on a minute, Powell. You were telling us that the inflation was transitory, but of course, you only have to look around now and see what's going on, what with the energy supplies, etc. This is not going to be the case at all, and there's going to be significant increases. And in fact, I did see, have I got it here? This was another thing for the Fed, this rate hike in 2022. Yeah, believe that when I see it as well. So I'll just put that up there just as a bit of entertainment. Here we go. This is what I was after. Goldman warns of oil spike to $90 if winter is colder than usual. It's going to be. As I keep saying, it's going to be the winter from hell. What with infection rates and everything else as people get exposed. I've never, in the last 15 years, haven't had a cold or the flu or anything. And these lockdowns where they've isolated people from one another, their immunity systems have been absolutely trashed. So God forbid what's going to happen going forward. Now I've had two awful colds and the flu at the moment in less than 6 months coming out of this, and we're not even into winter. So I dread to think of the elderly population going forward. There's just never seen so much of it about, but then I suppose that's going to happen, isn't it? You suppress something and then it explodes. So yeah, it's going to be an interesting winter fuel wise as well. We saw it with the energy thing yesterday as well, and we've already got energy companies going bust in the UK as well. So it's going to be an interesting time, but is it part of the end of the cycle of all of this so-called illusion of prosperity? I mean, what's happening in China with Evergrande as well? I saw an interesting video this morning. It was sent to me by a friend who lives in Asia and said, have a look at this. I can always put the link in the description for you as well. But yeah, there's a lot going on behind the scenes if you're prepared to have a look and see what's going on. I don't wish to be the prophet of doom. It's a case of being, forewarned is forearmed. Simple as that. Anyway, moving forward, and on a lighter note, I have managed... I'll tell you what, let's just look at the Dow and the market's reaction first for yesterday. Obviously, they've managed to bring the market back on the news. I mean, that's a foregone conclusion, isn't it? It's the same pattern, been the same pattern for goodness knows how many years now, 13 years or more. The futures drifted higher in the pre-market session, and this followed through in the main events. Then we've got the Fed there, and then it's moved higher as well. So again, it's exactly what you'd expect. It's the normal pattern until we get to the tapering season. Now, yesterday, the German Dax, of course, yours truly said, just keep the German 30. It seemed to be, they were continuing to update it. and use the data from that one to look at the daily chart. Well, that lasted about 5 minutes, didn't it? Because the number of emails I received about it wasn't updating, I had the same thing. And it really irritates me that there was no data for the daily chart. Well, I actually found a way of exporting and then importing the data, or the daily data, from the German 30. Might not be precise, but I tell you what, I'd rather have all of this daily data here to get a reference point of where the market's currently trading to where it has been, than have just 5 or 6 bars in the chart. Now, I have started to create a video, and I've noticed ETX actually already removed their historic data, but IG still have the historic data. If I just drag this down a bit here, History Center, at the moment they've still got it there. So when I finish recording this morning, I'm going to grab all of this historical data and import it into the MT4 that I'm looking at, and also keep these files on the computer as well. So I'll show you a video, or record a video showing you how to actually do this for those that are interested. Now, this comes with a caveat. I don't know whether this is legal to do, or I'm allowed to do it, or whatever, so it's at your own risk on that basis. But it's just a way that I can see that we can get around this issue of waiting for the daily chart to actually build up, because frankly 4 bars is neither use nor ornament in a daily chart of a market that's been trading for many years. So it just makes no sense, does it? So I've merged in the German Dax 30 into the daily to overcome this issue. Now, like I say, thanks to IG, and I'm going to actually pull this data off as well, so I can build up all of the other monthly, weekly, 4 hourly, and down. I'm not going to bother with the 5 minute or the 1 minute, but certainly down to the 30 minutes. I'm going to grab that data and store it, and then import it into ETX, so that I've got it in at the moment, in order to build these daily charts and longer term charts, which, if you watch the market alert, are the time frames that I like. They give us so much information. So yesterday we can see that we've moved back to the upside in the DAX. Now I've got this data, it's great. I can continue to draw in the daily picture there, and you can see we're approaching the 78% retracement for the German Dax there. And a quick look inside of the 30-minute for yesterday as well. You can see that, again, basically the market was just moved back to the upside there. And in the 2 minutes, which again we're just started settling down and into, I haven't got any live recorded stuff at the moment. I say I haven't been at the desk that much. This is the afternoon where the market moved higher, and in the morning, from 8 a.m, which is here, we've got, let me just change this. So I'm still in the process of putting everything together. So 8 a.m. is kickoff. There we go. So that was the morning session for the German DAX. Sold off initially and then moved back to the upside. So from Monday we'll be back in the saddle with more detail, and just checking that the swings in this, of course, may have to adjust the settings as well. Now there's the Fed release for the 2 minutes, and then the market responding otherwise. And that's where we are overnight, the market just sitting and trading sideways there. It is currently waiting for all of this news. We're back to the flash news for the month. It's a horrible session when you have the flash news, because it's only a matter of 15 minutes in between sessions, or half an hour. And then we go to the US for the flash news at 2:45 as well. And Bank of England today as well. There'll be no adjustment in interest rates for the UK, but there's other news there that they'll be releasing. So that's at midday for the Bank of England. Right, let's have a quick look at the metals. And silver, as you'd expect, was hammered lower as the dollar moved higher yesterday on the announcement by the Fed That's all that was required. No surprise there. Moving the dollar to the upside, however, that's lost its momentum overnight quite quickly, which I'm surprised by, to be honest. So you can see the dollar reversing there, and this is supporting both silver and gold at the moment, attempting to move to the upside. But don't hold your breath, because the 1 p.m. fix from London usually takes care of that and brings everything back to stop it getting too excited in the metals market at the moment. Gold there you can see also moving slightly higher to the upside. We just go back to yesterday. There's the market's reaction as well. You can see they shot the price of silver up on the news, and then they just hammered it back down again and seized the opportunity. Yesterday afternoon, a very interesting picture there, because they didn't actually move the price down. They actually allowed it to move higher, which is a surprise. Maybe they were expecting more from the Fed, but anyway, overnight they've managed to bring it down, but we're starting to see it move back to the upside at the moment, which, like I say, I'm quite surprised about. How long it lasts, who knows. We'll see at 1 p.m. when the London fix is made available. Now, while speaking about gold and silver, there's a brilliant article for those of you that are interested in the precious metals markets. Gold silver ratio opening up again. Really good article. If you want to know about an in-depth look at the gold and silver ratio, then go and take a look. If you just type in gold silver ratio opening up 0 edge in Google, you'll pick up this one article. What was interesting though, it's basically just a quick précis. It's showing that the ratio is getting close to 80, which I'd mentioned in yesterday's article. We're around about the 79, weren't we, yesterday, 79.13. But when you get to 80, it becomes bullish for silver, is effectively what they're saying. And this is the summary. That silver has hit an all-time high of $49 per ounce twice in January 80 and then again in April 2011. If you adjust for the 49 high for inflation, you're looking around a price of $150 per ounce. Of course, it won't be that high because of the manipulation by JP Morgan and Co. In other words, silver has a long way to run up. It does, but don't get excited, because it's not going to go until they stop manipulating. As one analyst put it, with the long-term downside potential of silver very low versus the current valuation, the risk-reward is one of the best investments on the planet, something that I've been saying for years. But the only thing that's stopping it coming to fruition, as I say, is the manipulation by JP Morgan and the other banks, and the 1 p.m. slam when the price is set in London, and that seems to set the precedent then for moving it lower in the afternoon session, but it drifts higher in the morning. Same pattern, a predictable pattern that it's been for a long time. This is not a recommendation to buy. I am just showing you that when you look for value in an investment and a long-term perspective, then this is one of those situations that doesn't come along very often. Simple way of probably explaining it. Right, that's it for this one. I'm going to go and grab that German Dax data out of IG while it's still available, and see if I can bring that into the ETX platform, and then use that to build up the other smaller intraday time frames, i.e. 4 hourly down to 60 or 30 minutes, just to give a bit more perspective and where we are. I know it's not probably a true reflection. Of course it's not going to be, because now we're dealing with 40 as opposed to 30 stocks, but I'd rather have that than have nothing. And certainly when in the daily chart and spend months waiting for that to actually build up. Otherwise, so how can you actually trade it? It's just bizarre that they didn't start collecting data on this a long time ago. Anyway, that will do it for this one. As ever, thanks for watching. See you in the next one.